A beginner's guide to investing. Different types of investments and how to start investing. In an increasingly unpredictable world filled with economic changes, rising inflation, and shifting job markets, investing has evolved from being a luxury for the wealthy too. Simply saving money isn't enough anymore. Inflation eats away at uninvested cash, and traditional savings accounts yield negligible returns. Necessity for anyone seeking financial stability. Before we get started, subscribe to our channel and turn on the notification bell so you never miss our latest content. Stock market investing. Stock market investing remains one of the most popular ways to build wealth over time. Stocks represent partial ownership in companies, and as businesses grow and become more profitable, their share prices usually increase. For beginners, investing in individual stocks can feel overwhelming due to the sheer volume of companies and market volatility. But with knowledge, patience, and a long-term perspective, stocks can offer substantial returns. You can invest directly in individual companies, or you can start with ETFs and mutual funds that hold a diversified basket of stocks. Moreover, many brokers now offer fractional shares and no-commission trading, making stock investing more accessible than ever before. Cryptocurrency investments. Cryptocurrency investing has surged in popularity, especially among younger generations looking for alternative investments outside traditional finance. Cryptos like Bitcoin and Ethereum have established themselves as digital assets with potential for high returns, albeit with equally high risk. In 2025, several emerging coins are gaining traction for their technology and real-world utility. Cryptocurrencies operate on decentralized networks using blockchain technology, offering transparency and security. For beginners, understanding wallet security, blockchain basics, and market volatility is crucial. Real estate investing. Real estate has long been a favorite investment for building passive income and wealth. Unlike stocks or crypto, real estate is a tangible asset that generates returns through appreciation and rental income. From purchasing residential rental properties to investing in real estate investment trusts, REITs, beginners have multiple entry points. In 2025, the real estate market is being shaped by shifting demographics, rising remote work, and the need for affordable housing. Beginners should understand the basics of property valuation, location analysis, rental yields, and mortgage management. Real estate requires significant capital but offers excellent tax benefits, long-term appreciation, and leverage options. New platforms even allow fractional ownership, making real estate accessible without owning a full property. Bonds and fixed income securities. Bonds are ideal for conservative investors seeking stability and regular income. When you invest in a bond, you're essentially lending money to a corporation or government in exchange for interest payments over time. They're less volatile than stocks and offer a fixed return, making them a cornerstone of a balanced portfolio. In 2025, bond yields are rebounding after a long period of low interest rates, creating fresh opportunities. Types include government bonds, like U.S. Treasuries, municipal bonds, and corporate bonds. While returns are lower than stocks, the risk is also lower, and they can act as a buffer during economic downturns. Mutual funds and ETFs, exchange-traded funds. Mutual funds and ETFs offer a beginner-friendly way to invest in a diversified collection of assets. Instead of picking individual stocks, investors buy into a fund that holds dozens or even hundreds of stocks or bonds. Mutual funds are actively managed, while ETFs usually track an index like the S&P 500. These instruments allow new investors to spread risk, access professional management, and start with smaller amounts. They also simplify the investment process, no need to research every company or time the market. In 2025, low-cost ETFs are increasingly popular, with themes ranging from green energy to AI innovation. Investing in commodities. Commodities, like gold, silver, oil, and agricultural products, are physical assets traded on global markets. They serve as a hedge against inflation and currency devaluation. While not as common for beginners, commodities can play a key role in portfolio diversification. For instance, gold is often seen as a safe haven asset during times of market uncertainty. In 2025, with geopolitical tension and inflation concerns, commodity investing is becoming increasingly relevant. Beginners can gain exposure through commodity ETFs, futures contracts, or stocks of companies involved in resource extraction, like oil producers or mining firms. It's essential to understand price volatility, market drivers, and the global supply-demand balance. Peer-to-peer, P2P, lending. Peer-to-peer lending connects individual investors with borrowers via online platforms, cutting out traditional banks. It allows you to lend money to individuals or small businesses and earn interest in return. P2P lending platforms like LendingClub or Prosper facilitate this exchange, offering transparency, borrower ratings, and various risk profiles. While it provides a steady income stream, it also comes with credit risk if borrowers default. In 2025, improved AI underwriting and blockchain-based loan verification are making P2P lending more secure and efficient. Robo-advisors. Robo-advisors are automated platforms that manage your investments based on your financial goals, risk tolerance, and timeline. They use algorithms to allocate assets across diversified portfolios, often at lower costs than human advisors. Services like Betterment, Wealthfront, and Sophie Invest offer personalized portfolios, tax loss harvesting, and automatic rebalancing. In 2025, robo-advisors are smarter than ever, integrating AI to predict market trends and customize strategies. For beginners who lack the time or expertise to actively manage investments, robo-advisors provide a hands-off, user-friendly solution. Investing in startups and crowdfunding. Investing in startups was once reserved for venture capitalists, but equity crowdfunding has opened the doors for everyday investors. Platforms like Seed Invest, Start Engine, and Republic allow you to invest in early-stage companies in exchange for equity. These investments are high risk but potentially high reward, especially if the company scales or gets acquired. In 2025, sectors like AI, clean energy, and biotech are attracting massive startup funding. Building your first investment plan. Now that you've explored the major investment types, the most important step is creating a personalized investment plan. A successful strategy begins with clear goals. Are you saving for retirement, a house, or wealth accumulation? Define your risk tolerance, timeline, and budget. Beginners should start small and scale as their confidence and knowledge grow. Diversification is key. Spread your money across asset classes like stocks, crypto, and bonds. Use budgeting apps or spreadsheets to track investments. Stay consistent, reinvest your gains, and avoid emotional decisions. If you enjoyed this video, give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. Thank you for watching.